front. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and some F&O cues as well. But first up, Vivek joins in to get us all the market cues that we need to watch out for today. Vivek, good morning. Positive handover from Wall Street again. Looks like the momentum is likely to continue.
Good morning, Harmal. Absolutely nothing to complain about when you're talking about how the handover was, and especially how Indian markets closed yesterday. Like you already mentioned, US markets, two of the US market indices hit fresh record highs yesterday, and very interestingly, Nvidia now surpasses Apple as, the second highest market capitalization company. So that is something very positive in terms of the handover. Now, talking about oil prices yesterday bounced a little bit off, but remember, they're still hovering near 4-month low, so that too continues to remain good news. Brent futures yesterday hovered around the $78.5 a barrel mark. Now coming to the Indian markets yesterday, they had a tale of their own. Indian markets have now gone ahead and reverted to the pre-exit poll level. So that is in itself quite significant and has recovered half of the losses that they made on the day of the counting. Now broad-based claims, when you're talking about what Nifty reclaimed, it reclaimed the 22,600 level yesterday. Along with that, very interestingly, all of the 50 Nifty stocks ended with gains in yesterday's trading session. Broader end of the markets, the gains were even more stronger, and especially yesterday the advance decline ratio was strongly in favor of the advances. FMCG stocks yesterday continued to see follow-on buying, especially names like HUL, etc. Moved almost 8% in a single trading session. Along with that, the auto stocks too continued their march higher. Yesterday, the auto index gained over 4%. Now, one of the key levels or the indices that we were tracking was the VIX. The VIX yesterday from very elevated levels day first day cooled off 30%. So that is quite significant. Asia as well as GIFT Nifty is indicating a positive start for our own markets.
The markets seem to be taking heart as more clarity emerges on the formation of the government. Vivek, thanks a lot for that. Let's now take you through some of the stocks that you need to watch out for. And PSUs continue to remain in focus. BHEL is the first one that you need to keep on your radar today. That is because it has received 2 orders worth around 7,000 crore rupees from 2 subsidiaries of Adani Power. So that stock will be the one in focus. Saw some recovery in yesterday's trading session, but there were certain PSUs that did not see recovery even as most of the pack recovered, and those were some of the defense PSUs. There you can see that Bharat Dynamics, Cochin Shipyard, Garden Reach, all of them taking a knock of as much as 10% even in yesterday's trading session. So it'll be interesting to see if these PSUs see some bit of recovery in today's session in line with the market sentiment. IEX came out with a business update for the month of May. It looks to be positive because of the peak power demand that India has seen in the month of May. Volumes overall were up 29% year on year, and the day ahead market volumes also were up around 7.5%. Remember, IEX has been an outperformer in the last few trading sessions, so we'll watch out for if the momentum in this stock sustains as well. Century Textiles is the one that you need to watch out for, the Aditya Birla Group company. Now, its real estate arm has signed a joint venture with Barmalt India for its luxury residential group housing project in Gurugram, and that project is set to have a revenue potential of as much as 5,000 crore rupees. So Century Textiles should be on your radar as well. Torrent Pharma is the other one. That company has signed an agreement, which is a non-exclusive patent licensing agreement with Takeda Pharma, and that is for commercializing its novel gastrointestinal drug in the Indian markets. And Minda is the other one that has also signed a tie-up with Innovance Auto for its electric four-wheeler portfolio. And lastly, NBCC has received orders worth close to 500 crore rupees. So lots of stocks in focus, and you need to keep an eye out on all of these names. Lastly, we head over to Nigel now, who's joining in with cues from the F&O space. Nigel, good morning. Recovered most of Tuesday's losses, back above Friday's close. What's the setup looking like now?
Well, that's right. Hormuz, in yesterday's trading session, a lot of the domestic money was at play because the FIs, they continue to sell, and we need to see more of the same. And just the same point that I've been making, you need to keep your SIPs going. You're in for the long haul, and you will make money. So just keep that in mind. What did the FIs do in yesterday's trading session? They sold in the cash market, but they covered some, shorts in yesterday's trading sessions. 20,000 contracts is what they covered, and in fact, they added close to around 20,000 long contracts. So that's where the swing factor is close to around 40,000 contracts. They continue to remain net short with close to around 83% of their positions on the short side. And if you pull up a chart, you'll see that from 3.55 lakh net short contracts, it's come down a little bit to around 3.11 lakh contracts. That's the point I was making, the swing factor of close to around 40 lakh contracts. Now, yesterday's close was actually very, very good, and it was heartening to see because we took out some crucial technical levels. And if you just pull up, the high of the previous session, you pull up the low of the previous sessions, a couple of days ago, you have both those levels out. We, in fact, retraced close to around 66% of that entire fall that we saw, which is good news. So that explains why, in fact, I'll say technically it's a very, very good close. What are the levels you're looking at? Well, in yesterday's trade, we bounced off, and we bounced off in style. And the 20 and the 50 DMA, both of them got taken out in yesterday's trading sessions. That becomes a bit of a reference point. You don't want the 22,400 mark to go on the downside. Even for the Nifty Bank, we managed to conquer decisively over the 20 as well as the 50 DMA. So let's see how things pan out. Today, you'll have the weekly expiry element as well to play out for the Nifty. Good bounce yesterday, but follow through is something that you'll be looking forward to. And let's see whether or not the bulls have enough ammunition to push this market higher. For the time being, I think maybe, in fact, we'll see some bit of consolidation even from these levels. Back to you.
Some bit of consolidation. Nigel, thanks a lot for that. And as Nigel was highlighting, it's the weekly expiry as well for the Nifty. So we'll keep that in mind as well.